What's going on, guys? Made $101 trading CrowdStrike, but I missed out on a massive trade. Let's get into the recap. So this is kind of a tough one because I'm gonna review it right now as like I just close this out because it's Friday morning now. Obviously, I don't know what's going to happen the rest of today, technically, and next week, but I don't like what I'm seeing really at all. And I figured to myself, like, let's just get rid of this thing because I could let it go and maybe it's a break even, and I missed out on $100. $100 is really, in the grand scheme of things, not that big of a deal based off the way I'm doing things nowadays and my sizing. But I figured I'd rather just take the money than take a break even. So that's what I decided to do. So here's what we got going on. This is a trade that I entered back on what is this? This is the 28th of January. So it's like, this was like 4 weeks ago. So I'm in this thing for 4 weeks. And technically speaking, if I jump out to the time frame this was traded on, I took this based off the weekly time frame. And it's like, yeah, like nothing wrong with that. Like, to be honest, like it's fine. The only issue is that March 3rd is their earnings, or the week of March 3rd. I think it's like the March 4th. Yeah, it's Tuesday, March 4th is their earnings. So when you zoom it into a daily time frame like this, here's kind of what I see. I go, the candle that broke was so freaking massive. Like, looking back at this thing, what kind of sucks is that I played the weekly time frame and I got in at the end of the day on the breaking candle, which everything was there, right? We had the break of higher volume, we had the break, we had the strong close, like all was there. It kind of back tested a bit shortly after, but then it still ended up going, and it got pretty darn high up there. I mean, the move, if you think about it, from even my entry, was approximately 11, almost 11.5%. It's a big ass move, you know what I mean, in a fairly short period of time. Like, that's I don't know. People talk about stocks and stuff, and every stock is going to be different. CrowdStrike, pretty decent large cap stock. I mean, their market cap is 103 billion. And for that thing to move 11%, and for you to be in that move of like 11%, that's pretty good. Like, that's, you timed something, you did something right on the timing. It's just like, as I look at this thing, I say, we had great gains. We were up a lot more on the trade, but just the way things kind of shake out, we get this decent pullback. They've got some FBI probe or some shit. I don't know, or some SEC probe, some shit's going on. Maybe that's part of the reason why. Either way, like, that could happen, and in the grand scheme, it's still a strong, trade or a strong stock. It's just now you're going to be running into that wall of earnings, and like, as we're going into this weekend, we really only have like 1 week left that I would hold this thing. And my thought process is it's not looking very good at all, and the chances of this thing in 1 week getting to my target fairly low, and a much higher chance of all it has to do is drop like $10 more to stop me out break even. So my thought process was, probability wise, based off of price action, based off what's going on, I see a higher probability of us hitting this break even and having a $0 trade versus hitting this and having a multiple $100 trade. And it's not even close. So that was kind of my thought process on this. And also, it's a weekend. Going into the weekend, you get closer and closer to that level. You risk the overnight gap down. What if there's bad news? Who knows? And next thing you know, you open up down here and you lose a lot more than you thought, yada, yada, yada. So that was my thought process was, like, I could chalk this one up as like, oh, essentially it's a break-even trade. But in like looking back, totally could have been better. Here's how I could have done a better job on this one, or what a better entry would have allowed for. Now, in the grand scheme, looking like I did what I did, it is what it is. I didn't really come across this stock until like I had seen this candle. So when I set my alerts, I don't think I forget if I did set an alert on this one or not, or if I came across it in just like a scan or looking around. And so I happened to come across it, whatever it was. I came across it here. Let's say, like, let's just go back in time and say, okay, that I didn't. Let's say that I came across it, as it was breaking this first blue line, because the second blue line was the prior all-time high. So it was like a secondary piece, like a prior all-time high, big area to watch. So let's say that I had entered this thing, not that I'm not requiring that to be my entry above the prior all-time high. I'm playing off this consolidation zone right here. So if I go back on the weekly time frame, doesn't really matter. I'm looking at daily. I can go to the weekly. It was a weekly time frame trade. But if I had gotten in, let's say somewhere around here, or even let's just say around the prior all-time high, if that was where I entered, even just before that, because we would have been clearly breaking above these consolidation highs. So if you had gotten in earlier, if I had gotten in earlier on that day, for example, let's say somewhere in between, okay, still would have been, like decently up off of the breakout point, would have gotten in, like you can say it late, depends upon how you view it. I like to give it time on these bigger time frame trades. I don't really care, because on the bigger time frame trades, like shit's going to take time to work, and I want to see kind of it holding above a level versus just like breaking it for 1 second and then falling right back off, because that could happen. Your stops are going to be tight, so you're not going to lose a lot of money, but in the grand scheme, I'm not like that worried about the timing. So if you look at this trade, I say, okay, based off of that, if I had gotten a better entry, or if I had gotten a bit of an earlier entry on this, you bring this in, and where it hit, right, would have ended up being a 2.68 to 1. You know what I'm saying? Like even a 2 to 1 would have bring you down into here, 440 would have been 2 to 1. We got about 450, we got 455, 456. So looking back, well, yes, it was the problem I have is like, this is the like saying this is all kind of in hindsight, and saying this is like cool and all, but I played it based off the weekly time frame. So there's something I could have done differently based off my strategy. Like this is if I had played it based off the daily time frame, or technically I guess off the daily and had I got in earlier. But if you go off the weekly and you go back to this, the weekly was like, I guess the weekly broke this level right here. I don't know, dude. Like it's the stop loss based off the weekly low would be down here. And so my stop loss being that daily candle was up here, so it was tighter. It was just kind of a weird situation, because the way that my strategy kind of works is I utilize many times that breaking candle low as the stop, and that breaking candle was a freaking 10%, 11% massive candle. So that, by getting in late, just automatically requires my stop to be like 10% lower than my entry, because I got in at the end of that candle, which is fine on a bigger time frame horizon, and it's fine if earnings wasn't a thing. But as the weeks go by and you don't get to that target, earnings is kind of inching up, then you happen to get a bad news week or something like this happens, which kind of just slows down the process. It kind of gives you a kind of a pullback inside of a bigger picture uptrend. Could totally go higher for all I know, but the risk reward doesn't make sense. So it's kind of one of those things where it's like there's a sweet spot for swings, like for me, because you have the earnings every couple of months. So I don't want the holds to be more than like 2 months, but I want them to be long enough to where I can get the move, I can capitalize on the move. But at the same time, you got to balance that. It's like, that's kind of the thing. Ideally, looking back, I was up a lot on the trade, could have maybe scaled it out, but I don't do that. It's not my strategy, right? So there's a million ways to go back in hindsight and say, yeah, coulda, shoulda, woulda done this, but you start doing random things. A reason why I don't do that is because it starts to deviate from my strategy. You can also say, well, then why'd you get out? Well, yeah, technically I'm deviating from my strategy, but there's a component of my strategy where I have to make that kind of subjective, or that's like there's this user discretion piece that I have to say, hey, we have earnings coming up. It's a weekend. Like, do you want to take on that extra weekend risk? Plus, the closer we get to earnings, the less I want to hold the position. It's been about a month now. Like, if it hasn't gotten where we want it to be, like, it's not really it's just not worth it anymore. So that's part of the situation as well. I figured it's going to go down as a win, and it's going to throw off my stats technically, because if you know how things work, like, it tracks everything. So this goes down as a win, but a small win at that. And so like looking back at this month, oh, my losers are actually bigger than my winners, not by much, but they're a little bigger than my winners. Yeah, because when you only take a couple of trades, this is going to skew the data. So when you skew the data like that, yeah, fair. If it had worked out, gone to our target, all it really was the difference was if instead of having this push right here, if we got one more, 2, 3, 4, 5% day, which we've had now 4% red days in a row. Yeah, targets hit, so it's like just the way the news kind of cycle kind of pops around and that's part of managing the whole thing. But I think the way that I think I manage it well in this situation, because I'd rather just take the small win and move on to the next one, clean the slate. Who cares? It doesn't matter. It's essentially a break even. Just put it away. Just the timings were kind of off and just didn't work. I think the idea was there. Huge move, like massive move. Like we totally, like, yes. So just the way that I had to structure my stop loss and stuff was a little bit off. That's really all, just for how the situation worked out. But that's going to be part of any strategy. People don't talk about this stuff. Like, that's part of any strategy. There's so much nuance. There's so many questions. There's so many things or different ways you can skin the cat. You can get caught up in all those things and let them fuck with you. Or you could just say, yeah, whatever, it's fine. And so my view is like, whatever, it's fine. I'm going to look for new charts, new setups, and that's my plan. And we'll kind of roll into next week. Either way, just to kind of take a peek at the S&P, I mean, it looks okay. Like we're going higher, but not in any, meaningful momentum fashion by any means. It's just a kind of a higher low, doing its thing. And CrowdStrike was going great compared to the S&P, very strong relative, but now it's no longer strong compared to the S&P. So you're losing that connection. And now once we're no longer strong compared to the S&P and we start to lose that relative strength, that gives me another reason or another box is ticked to get out at this point in time, given what we have coming up earnings wise and stuff. So that's the recap. That's my thought process. I mean, next week, I don't think it's one more week until the end of the month. The last day of the month is the 28th. I don't know if there will be any trades that I'll have. I to be honest, I kind of doubt I will take anything because I'm going to be traveling for a couple of days. And yeah, I don't know. I doubt it, but you never know. You never know. Based off what I'm seeing, I don't see a lot of setups. Like I'm looking through my trade list and stuff. I just don't see a lot of setups that are even remotely close to presenting themselves. I set some alerts like earlier this week, but like one of them went off and it wasn't even a good looking setup. So I didn't take it. And then, nothing on my list that I'm looking at here, like gives me a lot of like, oh, wow, I'm really excited about that. Maybe Apple is getting in a little bit more interesting, but I don't know. I'm not really a huge fan of it right now, but you got a lot of weakness on some of these charts. And it's like, I'm skeptical of playing the weakness because I've been burned by that so many times this past, really in the bull market. I'm waiting for more confirmation of a bear market to say, okay, I'm ready to play weaknesses now because it just hasn't worked. So there's not much to do when you're kind of in this limbo, which is fine because when it heats up, we'll be there. But when it's like, if I look back at it, the first 2 months of the year, not good. Like not like in the ultimate grand scheme, not good in terms of my strategy, price action, what I'm seeing. Not a lot of consistency. I don't feel great about it. But here I am at a 38% win rate, down $600, which in theory is like one trade away from going green, based on how I trade things. I'm feeling I feel pretty good about it. Like honestly, there have been years in the past where I would, try to compensate by day trading more and trying to catch these smaller moves inside of these consolidations. And the chances, I just learned that the chances of me winning more often than not on those is low. So if the probability is that I'm going to lose more money than make more money in these environments on day trades, I'm not going to do them. And then I just found that the swing trades work better for me. So I'm going to do that. And but when you get into this kind of slightly different style, you end up having like, there are periods in the year. If I go back to last year, let me see if I can go back. Let me just go back to last year. There are periods, sorry to make this a little bit longer, but I think it's useful. So I'm going to I don't give a fuck. If you go back to last year, there are like, it comes in waves, right? When you operate a strategy. So I had like, it was kind of choppy to start the year, but like I would say choppy, but like better. Like it was the reverse of what we have right now. Where like, it's not that bad. Like I'm getting some winners, some losers, more losers than winners, but we're managing it. Last year, the beginning of the year was like same thing, but like a bit more winners than losers, and we're managing it. And then we had a wave of decent run in early March. Then we go through like early March into early, for about a month, no, 2 months, about 2 months almost from, April, May, not much goes on. May picks up, big wave, make a big push. Not much happens, actually kind of going to, not drawdown. We pull back, and then June, kind of boring. Not much happens. Then a decent push in early July or in July. Great. Then we have that August, September pullback. Boom, mid-September, push. pullback after that, I sized up, and then a big push to end the year. So it's kind of like you're managing waves, and you know you're going to get these pushes. The waves are going to come. Just got to be ready for them. And then if you can maximize them, great. I think I'm in a position now, based on how I'm doing things, that I'm cutting out some of the fat. Not like you can't cut it all out, but I'm cutting out some of the fat in the day trade stuff that just wasn't worth my time. And my time is much more better spent, or my trades are better spent on the swing side. So if I roll into that and just kind of focus on that, you're going to have less like fluctuations, but more of these bigger waves. So these waves, I think, will be more pronounced with my swing approach. So like you might see, I mean, that was like, I don't know, go back to last year, that was like 3 or 4 waves, you know, maybe 5, I guess. So like every couple of months you get a wave. And like that's kind of how you have to play the game. So like assume that you're going to go through, you know, multiple week or month periods where like things are not really crazy. It's nothing crazy, nothing going on. Maybe you go through drawdown, maybe you go through just kind of like nothing's happening. It's kind of inconsistent, choppy, break even, whatever, or around that break even. But then you're going to get a period where like things are going to align, and it's going to be like go, 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 and boom. If you don't capitalize on that, well then that's where you're not paying attention, you're missing out, and that's like the whole job. And it's not like it needs to be a stressful thing. I don't think it needs to be. It's pretty chill. Like it's relaxed. Like you just know like that's coming. Like you just know, like inevitably, like we're gonna have a wave. We're gonna have a run. I don't know when, but we're gonna get it at some point. And that's kind of like in the back of my head. That's all that really matters, and that's all that kind of like, you know, I care about. Some minor other things that I should mention really quick. So I've been busy with a lot of shit, like work-related stuff outside of anything, you know, YouTube-wise. You can see on this channel I don't post very much anymore because I don't have time for the live streams right now based on my schedule. I got other commitments and other stuff I have going on. And it just like doesn't, I feel bad. I don't mean to say this in a derogatory way, but like I don't care. Like I don't sit here and get like excited like I used to about like fucking 0.5% move on the S&P and some bullshit going on. All I care about is my positions, and I monitor them. I check in when I'm on my desk every couple hours, and that's all I really care about. And I don't mean that in like a screw you, but like I don't need the extra brain capacity going over here worrying about this. Oh, what's going on with the fucking Fed? What's going on with the fucking president? I don't care. I just all I care about is my strategy and what I'm doing. So it's like that doesn't make sense. The live stream just doesn't make sense to do anymore. I might do them again at some point, maybe like in a once a week fashion during the evenings or something like that, when I have more time to just kind of chill and not get distracted after I get all my work done for the day. But that's the thing. So, you know, that's kind of where my head is at. But on the prop firm side, so I trade with the prop firm now on all this stuff. They are coming out with a new kind of program, and I've been thinking about it for a bit, and there's a pretty good chance that I'm going to buy one of their larger or largest account sizes in the near future. And when I do so, like, yes, it's going to be an upfront investment. Yes, sure. But the thought process is, because why am I waiting? I might as well just go for it. So I'll see how this new thing comes out. They have like this instant funding program coming out. Seems kind of sketch, right? And it is. I'll talk more about it when I get into it. But in a nutshell, the rules and stuff are a lot tighter. So you just have to lower your position size. So it's not that big of a deal in my head. But for people who, you know, get in the prop firm space, they see instant funding. They go, okay, if I can make 5% or whatever, if I can make a couple percent, I can pull it all out. It's all my cash. Great. We're going to make a ton of money. Well, now your daily drawdown is tighter and there's other rules. So you got to be careful. I don't care about that stuff. I just change my sizing. Whatever. So it doesn't matter to me. I would literally buy the account, plug it into my trade copier, and continue to just trade my $10,000 account. That's all I do. I still just trade off my $10,000 account, and then I have a trade copier that takes care of the rest. So all I am used to is trading on literally the account that had this trade in it. So I risk about $100. Now it's slightly variable. On an average trade, I would risk like $90, let's just say. And on maybe like a weekly swing or a bigger picture swing, or even a really, really good quality setup based off of like if all the stars are seeming to align, I might risk like 100, 110. Nothing crazy. Just like it's in that ballpark between 90 and 110 risk on average. So it's like that's all my brain knows, but the other account is automatically risking 2.5x more and making 2.5x more because it's a $25,000 account and I have a copier. So I literally set that up and I haven't touched it in months and it just does it. It just does its thing. So that's all I would do. What would end up happening would be the trade numbers will just be fucking huge compared. Like we'll be talking about thousands instead of hundreds. Like we're going from hundreds to thousands of dollars. So that'll be the difference, which in the recaps is going to be a massive, like it's going to be a big jump at some point. I don't know when, but probably in the near future. Probably is going to get you to click on the video if you're still watching this video. But you know, if you're not watching this video, those of you who are still watching this video, I appreciate you a lot because you're like, that's crazy that you're still here 20 minutes later. But those of you who are still watching, you know, whatever you'll watch anyway, probably because you're still watching this one. But everybody who is new to watching the videos will now all of a sudden go, oh my God, what the fuck? He's 2,000, 5,000, 6,000. Like when these numbers come in, that's just the nature of it. I've seen it in my own examples. When I go back in my recaps and like I see which videos get more views, the videos that get more views, the videos that have the higher numbers. It's very simple. That's just how it is. Am I doing it for that purpose? No, I'm just doing it because I'm trying to slowly scale this up. And my view is if I can make 15% per year, I don't really care. I'm happy with 15% per year. Some people say it's not enough. Some people say it's good, bad. It doesn't matter. What matters is my view. But 15% per year on $300,000 or $200,000 or $500,000 in funding or on that size of account, let me do the math. You know, it's meaningful. Whereas now you're talking about a couple $1,000s. Okay, fine, whatever. But if I 10x my account size, you know, all it takes on my end is going in and just putting trade copier times 10, multiply by 10. I trade my same account. I do the same thing, and that thing will just trade 10 times the size, and that's it. So that's probably coming soon. If you're still watching, I appreciate you. Stay tuned for the month recap because there's I think some good insights, but nothing crazy in this month. Stay tuned for that coming up probably end of next week if there are no trade recaps in between this period and then. I'm going to be going to Zion National Park. I'm actually going to be checking out St. George in the coming days because I think it's a place I could see myself living. So I've been going back and forth between like Scottsdale and I say going back and forth, Scottsdale, but St. George just kind of popped up in my head as like a cheaper version of Scottsdale, but also more access to skiing, which I like to snowboard. Whereas Scottsdale, not as much, because like St. George, you're 4 hours from Salt Lake City. So you're 4 hours from like the best skiing in the US. You're also like 5 to 6-ish hours from the beaches down in like LA, San Diego. I don't know if I'd ever go to LA, probably San Diego. I just don't feel like LA just is appealing to me. San Diego sounds cool. But you're like 6.5 hours from there. So you have more. You get a ton of national parks. I'm a big hiking guy. I love that stuff. I think that St. George kind of makes sense. So I'm going to check it out in the coming days. Go to Zion. It's going to be beautiful weather. So I'm like, let's go hike Angel's Landing if we can get a permit for it. Awesome to try. And then I'll be back next week, and then we'll get my brother's ski trip we usually take after that. So I don't know, the trading amount, I mean, I doubt. I swing, so I don't really care. It's not like there's like a lot going on, but when you have other shit going on, like this takes a back seat unless there is a beautiful setup that just slapped me in the face, you know? Thanks so much for watching. 24 minutes in. TradeZella code TC10 saves you 10%. That's this platform right here. I will see you in the next one. Peace.